Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TONGGUAN GOLD Group Limited Annual Report. TONGGUAN GOLD Group Limited offers a diverse range of businesses and services related to gold. At the core of its operations are exploration, mining, processing, smelting, and the sale of gold and associated products within China. The company also engages in gold recycling, which involves the sale of physical gold bullion. In addition to these primary activities, TONGGUAN GOLD Group Limited provides a range of related services that cater to the gold industry. These include the exploration and extraction of gold from various sources, as well as the processing and refining of gold into its purest form. The company's expertise extends to smelting, where it converts raw gold into usable forms for industrial or commercial purposes. TONGGUAN GOLD Group Limited services also encompass the sale of gold products, which can include bullion, coins, or other gold-based commodities. This aspect of their business caters to both individual investors and institutional clients seeking to purchase gold as a store of value or for investment purposes. TONGGUAN GOLD Group Limited maintains a market capitalization of $16 billion, broadly in line with the industry peer group. TONGGUAN GOLD Group Limited trades at a higher price-to-earnings ratio of 28 times and a lower price-to-book ratio of 4.02 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 43% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth in a given period can be attributed to several key factors. Firstly, an increase in the sale volume of mine-produced gold from approximately 2.22 tons in 2024 to 2.96 tons in 2025 contributed significantly to the revenue growth. Additionally, the company's revenue increased by 49% from $1,605 million in 2024 to $1,396 million in 2025. Another significant factor was the introduction of a new revenue stream through the streaming agreement, which generated $29,042,000 in 2025 compared to nil in 2024. Furthermore, the company's gold mining operations segment experienced a remarkable growth of 83% from $302,774 in 2024 to $396,218 in 2025. The increase in sales volume and average selling price of mine-produced gold also played a crucial role in driving revenue growth. Specifically, the company's revenue from selling gold bullion on the Shanghai Gold Exchange increased by 44% from $393,393,000 in 2024 to $124,801,000 in 2025. On the other hand, the primary drivers of revenue decline were largely due to a significant decrease in income from gold recycling. The company's gold recycling business experienced a 100% decline in revenue in 2025 compared to 2024, with no transactions made during this period. The net income of the company experienced a significant increase in 2025, rising by approximately 151% from $972,972,000 to $1,310,951,000. This substantial growth can be attributed to various factors. One key contributor to this increase is the improvement in gross profit margins. The company's gross profit margin increased by around 14.6%, rising from 40.1% in 2024 to 54.7% in 2025. This significant boost in profitability suggests that the company has successfully optimized its production costs and pricing strategies. Additionally, a decrease in tax rates for PRC subsidiaries played a role in the increased net income. The reduction in tax rates from 25% to 15% resulted in a lower income tax expense of $96,713. While this may seem like a minor adjustment, it still contributed to the overall increase in net income. Overall, these changes indicate that the company has made significant strides in improving its profitability and reducing costs, leading to a substantial increase in net income in 2025. The company's debt level has undergone a significant change in recent years. According to the financial reports, bank and other borrowings decreased by HK $44,067 on page 4 and further reduced to HK $477,215,000 on page 26 from an initial amount of HK $530,596,000. This indicates a substantial decrease in debt level. However, despite this reduction in debt, the company's interest expenses have increased significantly. On page 13, it is mentioned that interest on bank and other borrowings increased by HK $1,073, 4.6%. Furthermore, finance costs rose by HK $4,405,000 on page 24. The total interest expenses also saw a notable increase of HK $4,405, 14.3%, from 2024 to 2025. This suggests that while the company's debt level has decreased, its interest expenses have actually risen. The performance of various segments and regions within the company has been mixed. On a positive note, the gold mining operation has shown significant growth in revenue, with an increase from HK $1,302,774 in 2023 to HK $1,396,218 in 2024. This is reflected in the segment results, which have also seen a substantial rise from HK $522,972 in 2023 to HK $1,310,951 in 2024. In contrast, the gold recycling segment has not provided sufficient information to assess its performance. Furthermore, the streaming agreement has been underwhelming, with no revenue generated in 2024 for the within one-year segment and only a modest HK $30,670 in 2025. The more than one-year segment has fared slightly better, but still lagged behind expectations with a revenue of HK $177,276 in 2025. Overall, while some segments have shown promise, others require improvement to meet the company's goals. Management's outlook on the company's future is optimistic. They are leveraging their listed status to invest in diverse opportunities, positioning the company for growth. Despite anticipating global economic challenges in 2026, management believes that gold will experience a surge in demand due to geopolitical tensions and monetary shifts. The company remains committed to its core values of corporate responsibility, prioritizing environmental sustainability, workplace safety, and community engagement. To enhance competitiveness and strengthen reserves, management is advancing initiatives through exploration and strategic acquisitions. This forward-thinking approach suggests that the company is well prepared to navigate future challenges and capitalize on emerging opportunities. That concludes the financial summary for TONGGUAN Gold Group Limited. Feel free to comment below, and I will be happy to answer them when possible.